The S&P 500 Stock Market Index broke above 5,000 for the first time in history, making a new all-time high. So you may be wondering, what's next? Will it keep going up? Is it a good time to buy stocks? In this video, we will be analyzing the current data to find out what the wealthy investors are doing, because as we all know, the rich are getting richer with their investments. So we want to trade in the same direction as the rich to make money and stay profitable, using their trades as a guide for us to make better decisions in the stock market. So without further ado, let's get to the data analysis as usual. We will be using the SPY ETF that tracks the S&P 500 index. And as usual, we will be analyzing the unusual options activity, which represents the trades of wealthy investors. If this is the first time you are on our channel, make sure to subscribe and hit the bell icon so you'll be notified of this type of analyses that we do. As you can see here, on the last trading day, Friday, February 9, we have these 15,425 contracts for the 495 strike puts expiring February 13. We will be analyzing this data and also the next one, 8,300, all being done by the same investor at the last few minutes of the market, because this one is actually more meaningful. Okay, because the trade value here is a lot more. Okay, so let's get to the first one. February 13, 495 strike puts. Expires in just 2 days. So when we take a look at the 495s, we can see here that the volume is 20,000. That's much greater than the open interest of 2,000. So we know that these are opening trades that happened on February 9th, where they are buying these puts. Okay, so these puts are being opened. And you can see clearly that this is a bearish trade, because the SPY currently trading at 501. If it goes down on the x-axis here, going down, you can see that the trade becomes profitable. This is a profit loss diagram showing profit and loss. 0 here on the y-axis. If the lines are above 0, this is profit. If it's below this 0 line, then this is a loss. Okay, so you can see that it becomes a loss if it goes up, because this is a short bearish position with a negative delta. Okay, so based on this data, which the trade value, though, we do want to calculate the trade value. You can see that they paid $42 for each of these put options, and there was 15,425. Now, this is only $647,000. So keep that in mind, because this is not as significant in comparison to $1 million trades that we typically analyze, because this trade, because it's less than $1 million, it does not meet our threshold for a high probability trade. All right. If you are interested in the higher probability of profit trades, make sure to go to our website. We'll put a link at the top here where we share $1 million trades so that you can pick the right stocks, because that is also very important to diversify your portfolio with the right stocks that the wealthy investors are trading, because they are not always right. And as long as we can pick their stocks that they're trading, that is higher probability, then we have an edge in the market to make money. Okay, so check out our website to learn more. Let's move on to the second set of data here, 8,300, to find out what is going on with this trade at the last few minutes of the market at 3:53 p.m. These options expire March 1st and March 15. 481 strike puts, 469 strike puts, and the 491 and the 481. Okay, so let's take a deeper look at the chain as usual. For March 1st is 19 days away. So this is a few more days out. And we see here at the 481s, right down here, we can see that the open interest was 11,000, which is greater than the volume. And at the 469, we also see the open interest 10,000, which is greater than the volume. Okay, so we believe there's a good chance that these are closing trades. Okay, that they are closing out of this trade here that they originally had and moving it to the March 15. It's a strategy known as rolling their trades. So they're rolling it out in time and also changing their strike prices. And they're changing the strike prices to a higher price level at the 491s. Okay, so this is the price level that they opened with. You can see here at the 491s, open interest of just 3,499. That's less than the volume. So that's one way we can tell these are opening trades. 481 is also open interest is less than the volume at the 481. So this is the opening trade here, where we believe they are buying the 491s and selling the 481s. And when you analyze this trade, you can see that the trade here is also bearish, okay, with a negative delta, with negative 11 here per contract, okay. And if we want to calculate the trade value, we can see that for these opening trades at the March 15 cycle, they paid 302 and they sold for 162. So each trade cost 140 and they had 8,300 contracts. So this was $1.1 million. So more than the prior one that we had just analyzed. So this was more meaningful to us. Okay, so based on this analysis, we believe that there is a good chance that the market is going to pull back. Okay, it will not necessarily pull back very deeply because they sold the 481 strike puts. So this level here, which makes sense because we have found some support here, right? So this level of support was also shown here on this day. Okay, so this happened on January 31 when we found support and it bounced back higher. You can see that happening here. So we expect this to potentially happen again, where there will be a pullback and then we could go potentially higher, perhaps, but we'll have to reanalyze the data. But it could also consolidate and find a new level. We'll have to take a look at the data. But again, trading the index is based on this data is sometimes more uncertain because there is a lot of data and a lot of investors use this ETF as a way to hedge their positions. So they could be using this as a hedge for their underlying positions, which are bullish. And so that's something to keep in mind. And that is why we focus mostly on picking the right stocks and not using the ETF, because there are stocks in the ETF that show good data to us where it is a good time to buy, right? So that is what we focus on, picking the right stocks so that we have an edge in the markets. We'll put a link to our website again where you can learn more on our strategy and our analyses, where we can stay consistently profitable to make money as the rich are doing every day with their investments. All right, please smash the like button. And as usual, subscribe if you haven't, and have a wonderful day.